Guys, also worth turning to Disney because the company did late last week its 10K, and a couple of analysts have weighed in. And I thought, Barclays sort of focused on this acceleration of the rate of amortization of certain content at Disney. Essentially means they're sort of changing the way they view, the lifetime, the overall, how valuable over what period of time is their content. And so if they tuck in on the amortization, right, shorten it a bit, that's going to have the impact potentially of changing earnings guidance.
Right.
And remember, it was the earnings guidance in particular that shocked so many people. Barclays says, and you just read it there, one of the reasons why Disney's recent operating income guidance for next year was significantly lower than consensus expectations was because of that perhaps acceleration of the rate of amortization in early periods for their content. They go on to say at Barclays, this is not just a Disney issue. This is something that other media companies as well most likely are doing, could be meaningful. They all try and figure out what's the value of my content in a streaming world. And how long can I amortize it over?
Nathan's piece?
I looked at it.
That was amazing. Far less profitable company than we expected.
That was
only half the net income we thought they'd generate in fiscal 22. Only 12% of the free cash flow compared to their prior estimate.
They need a catalyst there. They need a catalyst there. They need something that says that, okay, look,
Bob Iger's not going to be a catalyst.
Well, you have to take each division and say, listen, we have a lot of people in these divisions.
Yeah.
There's too many people, too many divisions. I don't know. I look at it. I read that piece, the Moffett-Nathanson.
Yeah.
And I said, talk about having your work cut out for you.
Even though they try to be positive in the Moffett-Nathanson piece.
Yeah. They tried to be positive.
Target of 120 over at Moffett.
Yeah, well, Tannehill ran for more yards than Derrick Henry and tried to be positive.
Yeah,
Tannehill
but
running
if you are interested, there is always a lot more information in the company's 10K for Disney. That's the case.
But
again,
I thought
last week.
Those pieces taken together, where my Chapel Trust owns it, were just one more of like the beatings will continue until morale improves.
Speaking of upgrades and downgrades, Truist ups MGM to buy. They go to 50.
Right.
A lot of the casinos, Jim, benefiting today from this Macau optimism.
Yeah. My Chapel Trust, you can follow, of course, by joining the CNBC Investing Club, owns Wynn, and it had been a disaster, and then suddenly it's not a disaster. And I'm anti-disaster and pro-non-disaster. I think that Wynn also has the Tillman Furtada. Maybe something's going on there. I don't think so.
You don't think so?
No, it doesn't matter.
Yeah.
The problem is Wynn is not run by that mob that used to run it, that I liked so much. The Steve Wynn, Maddox. This guy Craig Billings is good, but I loved they sold some of the land of Boston. I think that there's a lot of good stuff here, but at the same time, what a run. So be careful.
Shares of Apple are up, guys, bucking the overall trend in the market at this point.
Well, David, when are they going to pre-announce? That's the way every single one of these pieces reads. I mean, give me a break.
And they would pre-announce because they're not going to be able to meet iPhone demand as a result of the problems?
There's so much demand. I mean, look, if you want Verizon, AT&T, T-Mobile, I mean, those are people when you buy a phone, you get your phone through them. I'm thinking of switching. I switch to T-Mobile. I make some John Ledger happy, and I get a new phone.
John Ledger has nothing to do with T-Mobile anymore.
No, but he's like...
You'll make Mike Sievert happy.
Oh, no, Mike's... Absolutely, I just meant John Ledger tweets a lot. Mike Sievert, thrilled.
I love John Ledger.
Mike Sievert did a big deal with Salesforce. Not that anybody cares. Because it was just business.